Good morning, everybody. Welcome to Phoenix Trading Strategies, free trading room. Today is February 20th, 2015. For those of you that have never joined us before, welcome. Before we go anywhere, let's go to the disclaimer and go and begin from there. Disclaimer: future stocks and spot currency trading have large potential rewards but also large potential risk. You must be aware of the risk and be willing to accept them in order to invest in future stocks and forex markets. Don't trade with money you can't afford to lose. This website is neither a solicitation nor an offer to buy and sell futures, stocks, or forex. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed on this website. Past performance of indicators or methodology are not necessarily indicative of future results. Being that said and done, it is Friday. Thank God it's Friday. Once again, welcome to Phoenix Trading Strategies, where we look at trading from a different perspective, from the realist perspective, which is a digital war that has been declared by the financial industry against the retail trader, even though they themselves right now are, or amongst themselves, we're caught in the middle. So welcome. For those of you that have never been here, I want to invite you to take a look at our homepage. You can take a look at our About Us page, and that really gives you a background on myself, my history, my experience. You can take a look at our blog. Our blog is very interesting. We're actually going to be posting new videos up today, and you can see trades that we've made here. You can also go to latest trades, and these are some of the latest trades that we have. We haven't posted the ones that we did this week. We're going to be posting them up this evening and tomorrow, and trading videos. All you have to do is just click on it, go to continue reading, and you'll be able to catch the video along with the results of the trade. Being that said and done, thank you. No, Twitter, not now. You can also take a look at our indicators and read a little bit more about them. It's always interesting to know what's going on. You can read, basically just click on it, and that'll give you a description of the indicator, which is always nice to have a brief understanding. You're never going to really understand it until you see it work live, and that's why we do the European sessions, so that you can see how our technology works on the live edge of the market, and you can see how we look and identify trades real time. Such is the case that Thursday morning, or Wednesday evening for me, we were able to do that, and we caught 4 trades, one which we decided to close out on, and the other 3 that we held on very strongly and ended up playing in our favor. We're going to go over those today because they hit the mark that we said, and they were swing trades, which were generated over 150 pips each one. So before that, let's take a look at the calendar. It's always interesting to see what news we have coming up, and I always like to look at Forex Factory. You had French flashing manufacturing PMI earlier this morning. You had German PMI, Euro PMI again, retail sales for the UK, Eurogroup meetings, and all this has become a Greek tragedy. And of course, right now, within the next 40 minutes, we're going to have PMI for the US. Not really a big mover, but you know what? The market's already moved overnight with everything else. I always like to take a look at a leap rate as well, just to take a look at the news and see, who's having a bad moment and who's having a great moment. JP Morgan takes its stake in plus 500 back down to 5.19%. We have KMP issues update regarding Apari insolvency due to the Swiss National Bank tsunami that caused all that. Clients' meeting to be held March 12. Leap Rate TV. Nigeria closes FX window. MetaQuotes offers rental of apps. FX Pro embraces auto trading, investment trading. Zuka's got beat to set leverage on euro pairs at 1 to 30 over the weekend. Whoa, that's not good. They're really fearing the Greeks exiting. All right, I hate those windows. State of Texas jails FX fraudster for 97 months. Oops. That's a good one. And, uh-oh, not yet. We're not there yet. How did that happen? Kevin G. White pleaded guilty December 11th, committed mail fraud in connection with commodity trading fraud scheme, and was sentenced to 97 months to federal prison. Or also ordered to pay restitution of $3.9 million. Not bad. Not bad at all. We have a new chairman now for the NFA. Interesting. And FXM offers to set off trading products for free. Oh well, we all knew that FXM was going to have an issue, but they just continue to give and give and give. So that's pretty much on that end. Let us go to the charts and see where we stand. You know, we took this trade Thursday morning or Wednesday night up here. I got in here at this point. I got out here yesterday with about 51, 54 pips. And I didn't hold on to it because I should have, but I didn't. It is what it is. But from my entry to where it came all the way down, 132 pips. I was thinking 150. 132 pips is great. I got out with 50. I did say that it was going to break below this price level, which was 113.22, that it was going to come here and that it was going to go into the 1200s. I was expecting it to go down to 1220, but it didn't. It came as low as 1276. Still a great trade. Can't complain, you know. It was, we don't do hindsight here, John. We actually trade live. Let me see. We have some questions. Yeah, I'll talk about the financial world a little later. So, you know, we entered it here during the European session. It went against us about 20, 25 pips. You know, we had identified the 120 level. We had identified the 240 level. We identified a 60 level, and on and on. We had 4 levels that we had nailed, and we even identified one on the 15-minute, which is right here. And I said it was going to go down because they knew they had already chosen that direction, and this was a swing trade, which was going to take about 2 days. In actuality, it did take 2 days. I don't think it'll go lower any further. It is what it is. You know, like I said, sometimes these trades take 1.5 days to 2 days to play out. You could end up taking 150 to 200 pips out of them. My tolerance for swing trades is half the run. You know, I'll let a trade run for about a day, no more than a day. I'm pushing it. I just don't have the tolerance to hold on to the trades that long. Some could say it's fear. Some could say it's, you know, I just want to take money off the table. You're right. I'd rather take money off the table. Or did you hold on to the trade, or did you get out of the trades? So from that perspective, you know, it all depends. It depends on you. It depends on if you want to hold on to it or if you want to, you know, just take your profit and run. And I'm the type of person that if I see a profit on the table, I'll take it. I won't apologize for it. I don't see the need for it. It's just a little different. And that makes a big difference, you know, in that regard. So you know, this trade, like I said, you know, it went against us 25 pips, and then it came down. And I held on to this because I knew this was, you know, this pair was our leading pair, and it was the best pair out of all 28 that night. Out of all 28, this was the best pair. We also got into the Euro Aussie, and that one gave us a real whipsaw because that one went against us close to 50 pips. Now, because it's a swing trade, you have to be able to withstand a drawdown of at least 50 to 60 pips. You know, I don't like to. Normally when I intraday trade, I don't like to expose more than 20, 25 pips, and that's pushing it. Again, that is my tolerance for pain. We got into that trade, where was it? Where was the entry? Here, right below 146.76, and it came all the way up to 147.23. It gave us a good whip, but I held because I knew there was going to come down. Again, we were going off what happened with the euro, but look at how much this thing just dropped. I mean, this thing really kicked everyone to the curb. Here was our entry. Look at where it ended up landing. 280 pips. I said 230. This thing yielded 280 pips. And I said it was going to be about a day and a half because it was a swing trade again, you know. And normally I don't find those trades every week. I do find them once a week. And these trades can make the difference. If I would have held on to these trades right now, my total for the week right now, instead of being 155 pips, I would be up, I'd like to say close to 500 in one day, in one trade. That is really, really phenomenal. Now, granted, it took us for a ride, and I held because I knew they were going to come down. But this was a 280 pip move, and that is substantial. That means in one trade, you could have made your goal for the week. In one trade. The other one that we took was the Euro New Zealand. And this one, you know, it just moved. Just like the Euro Aussie. And the reason I'm going over these trades is because, you know, there was a lot of fear and doubt. And this one we got from the very top. It didn't even go anything against us. This one was just a given. We had identified the levels. We said they're going down, and they went down. Our entry was here, and it came all the way down here, 224 pips. So if I would have held on to these trades, I would have picked up, let's see, 280 plus 224 plus 130. That 634 pips in one trade that would have taken 2 days in these three trades. Instead, I got out with 155 pips. You know, again, I didn't have much more to prove or say, and I had met my goal for the trades and the day, and that's it. But some of you that are looking to find these swing trades, you know, that's right. It's half of a new car for Junior, not for me. For me, it takes a lot more to please me with that. But you know, these trades appear once a week, and we're able to identify them once a week, and not necessarily on Wednesdays. You know, sometimes they'll happen on a Monday, a Tuesday, even a Thursday. Thursday night during the European session. And you can literally make up the week for it. That to me is substantial. But what's more substantial is that we were able to identify the levels in advance, and we were able to identify these trades and get into these trades literally an hour before it kicked. Now granted, they spiked, and rarely have they spiked against me that much, but taking into consideration the situation between the European Central Bank and the Greeks, it was understandable, But at the end of the day, that's really what it came down to. The magenta dots, these are pivots. So, and I'll explain further how those work. But yeah, overall, at the end of the day, these were great trades. They ended up playing out. Like I said, I wish I would have stayed in them, but instead, I took my profit here. I made 54, 51, 55 pips on each one, and I was happy with that, quite honestly, But if I would have held, and I didn't hold because of the nonsense between the Greeks and the European Central Bank. I just couldn't, but I knew that they were going to come back down. I had a gut feeling that they were just going to rip right through the levels, and that to me made a difference, a huge difference. So yeah, it can't say that the technology doesn't work. We're putting it to the test in a live environment. We're looking and identifying trades that no one out there is willing to do. To me, that's significant, very, very significant. So now let's take a look, see if we find, something to look at that would be reasonable. Now, this is a 240 minute, and I'm going to have to go down to a smaller minute. Give me a second. Columns. And we'll go down to the 30 minute. I like the 30 minute a lot, actually. Actually, no, because there's a news event, I'm going to go to the 20 minute on this one. And again, we found these trades on the 240 minute. The market analyzer, because we set up the settings to identify the power dots, was on the 240 minutes. That's how we identified this swing trade. And I mentioned to you that these trades on the 240 minute are swing trades and are very, 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 very solidified as trades. They don't, I haven't seen them miss, that. Yeah, you know what, Keith, I agree. I mean, you can scale out of the trades and all, but myself, when I know the direction of a trade, and that's just me, again, it's a personal choice. I don't really like to do that. I like, my risk for tolerance is one standard lot per trade. That's it. I don't want to do any more than that, and the reason for it is because I just don't feel the comfort zone in doing that. Other people like to put in multiple lots. I have clients that trade 3, 5 standard lots per trade, and they don't apologize for it. But then again, because of the amount of lots that they're trading, they don't have a tolerance to hold the trades longer than 20, 30 pips. But their return on investment for that is high. So it makes a difference. All right, it seems like gold is in play. Let's take a look at gold real quickly. It's always interesting to see how gold plays. Indeed, different strokes. And I don't like to trade more than 5, 10% of my account. I feel that it's reckless to do so otherwise. Okay, so here we have a dot here, and they hit this level. See, these previous levels that I identified that went long, they hit them, and I'll draw a line. No. We wanted array. My mistake. And we want to go red. Make that a bigger. Yeah, so see, they hit this level, bounced right off of it, and came down. Now, would I have taken this trade on this minute? I don't think so. But if I look for it in the smaller time frames, if I see power dots at that level, I probably would have. Yeah, I know, but I don't like to trade micros. I feel that if you're, for some, at least right now, I'm just not into it to do it that way. See here, look, no power dots here. Let's see if this one formed here and stopped this cold right now. And the distance between this and this is $2, so I would hesitate. However, this is in the middle of a range, and you see how the candles are trading below the trend dots? That tells me that this could eventually come down and break right through this level. And that means that this could be a $2 drop from here to here and potentially come down to 12.03. So it could be a $5 trade. I'm just not interested because it doesn't fit my profile of a trade. It has to fit. You have to be comfortable with the decision that you're going to make when you trade. If you're not comfortable with that decision, then you should not be trading at all. Bottom line, that's it. There is no excuse. There is no other way of defining it. You have to understand your strategy, stick to your guns, don't change it. See here, for instance, in the 5-minute, it's forming here, but it's in the middle of a range. I'm afraid that they're going to not hold this level, like I said, and come right down here, and then come down here. So, but there's no power dots up here. And because there aren't, even though it was trading at this level, I think I would have waited for them to pull back and probably gotten in on this trade down. So this would have been from 12.13 even to 12.08. Not bad, 5. But it could come down another 5, and that could signify, a $10 trade for gold, which is very significant. If you're trading futures, that's a big, big move, not small. But again, not my cup of tea. Let's take a look at the Aussie dollar. Aussie dollar seems to be in play. Now remember, the nice thing about the market analyzer is that it does everything for you. It tells you when the power dots have formed. It tells you when it's in congestion, when there's a wide bar, when it's trading close to the trend stop, and you can change the minutes or have multiple market analyzers up. You can have a 240, a 60, a 30, a 15-minute, even a 20-minute. It all depends on what you're trading. With FX, the 20-minute is very effective right before a news event, but nothing's come up and we're about to hit news right now. So here, see, this is a great trade. Look at how the Aussie dollar has been continuously going long. They broke this level, and I had taken this. I was right about this trade going long, actually. I'm pissed. Let me go to the 15-minute. Now I'm really upset because I got out of this trade. I actually took a 13-pip loss during the European session because it just didn't fit my profile. I knew it was going to go long, but it wasn't. It wasn't because the signals were there completely. It was more intuitive, and I don't trade on intuition. I hate doing that because, and you shouldn't do it. Never trade on intuition. See? It came down. I went long here. It went against me 13 pips, and then it went long, and then it became a swing trade, but it didn't fit the profile. And this is what I'm trying to get across to some of you that have the indicators. Now, if you would have seen this at the end of the day yesterday and beginning of the new day, and I didn't because I was picking up my sons and out and about, I would have taken this trade long. And this trade would have yielded me, let's see, ruler. Let's say I would have gotten in. Yeah, I would have gotten in around right here, actually. 57 pips. Now that's not bad. 57 pips is very, very decent for one day. I like those trades. I like those odds. Why would I have taken this trade? This is a great example. You see these power dots, how they formed here? They isolate three things, and we're going to go over them. Number one, they isolate the price level that the banks refuse to break. That means that you get the roadmap. They're giving you the roadmap of where and how they're going to trade. Number two, it tells you that volume is coming into play. Now, you're saying, but there is no volume. Look how small the candles are to the human eye. But the way we synthetically create volume, you can see everything. The emotion behind the need to rebalance their risk, which is what we call currency portfolio rebalancing. And number three, volume and momentum. Momentum. Why? Because they're going to start to mobilize this trade. And our volume indicator, which is this bad boy right here, allows you to see, number one, the total volume. Number two, allows you to see their buying volume, their selling volume, and their net. So that means that on this little candle right here, there was a total of 93 million, 42 million on the buy side, 52 million on the sell side. So that meant that this was a bullish bar with negative volume. However, that doesn't matter. What matters to me is how it played out. So what do? I look at the previous candle. And this previous candle told me that they had 53 million on the buy, 54 million on the sell, and they rebalanced their sell orders before going long. Here, granted, they had more selling volume than buying volume, but what this means is that they could not fulfill their sell orders. The buyers weren't willing to buy. They did buy more up here. As you can see, it fully rebalanced 52 million to 52 million, which is perfect, and on and on. Now this, granted, is the end of the day. But look at this one. This one had 35 million on the buy, 71 million on the sell, and it traded up here instead of coming down here. Doesn't that seem odd? So, and they were trading above this price level, which we had identified the previous night, which was 77.79. So they held on to it. So the fact that this level was identified during the European session, and the fact that towards the end of the day in the U.S. session, they identified that they were not coming down, you had two levels of confirmation telling you long, throw the kitchen sink, long, go long and throw the kitchen sink. That's what it meant. Is that bar the long iceberg? I'm sorry, you lost me there. Ascending power dots also means go long, and do it aggressively. Don't think about it, don't doubt it, because they're going to move. Let's say that they would have come just up to this level. You could have picked up easily 25 pips. Easily. 25 pips. But as soon as they traded and held, this is where the trend stop keeps you in the trade, because you see this line right here, this row. It's basically acting also to a certain degree as the moving average, but it's not. And so it's holding as a level. The minute that the candles start to bounce off of this and just hold, it means that it's going to continue, which in actuality it did. Until they would have crossed this level and actually gone from bullish to bearish the way they did here, I would have stayed in this trade. I would have allowed it to run, especially because it was during the Asian session. And even though the Chinese are celebrating their New Year right now and it's a whole week of partying and liquidity is a little down, it wouldn't have meant anything because at the end of the day they were still going to do that. Oh, absorb market orders at fixed price. Yes. Yeah. So basically, this was huge. This was very, very big in that regard. This was a slam dunk trade. This was a slam dunk trade. Now let's see what it's telling us to analyze because it's being a real pest. Okay. Oh, the NASDAQ. I'm not interested in the NASDAQ. Let's take a look at the Euro Pound. Now I know that what I'm talking to you sounds alien, and it is, and it should be, because no one else out there likes to talk about what we do and how we do it. But bottom line is that we talk about the reality of the market here and how it really performs. That's the difference. Let me see. Okay, so we are here on the 15-minute, and we had one power dot here, and all it takes is one, as you can see. This was at 1:45 in the morning a.m. Pacific, which was 4:45 a.m. Eastern Time, and then they came down. Let's draw a line. Sometimes you don't have to draw a ray, just draw a line so you can see it for yourself. I like dark orange, and I like leaving it solid because it's a good visual, and it tells me that they're not going to break above this price level. You see, when this little pinky forms here, this little dot, this yellow pinky, that's telling you, wake up, pay attention, we're about to trade. And they begin to trade. And even though you don't have any more rows of dots, power dots, it doesn't matter. It's telling you, it's identified the power play of the moment. In this case, of the night, because it's night for me. That to me is significant. Hold on one second. Yeah. I do hum. I know, it's annoying sometimes, but bear with. So here, I don't have a trade. I would never take it, but I would have taken that trade during the night. And now here's a good question. Where would your entry have been? We're going to address that. 32 pips. It would have been the most conservative 32 pips you could have ever made. That's the bottom line. Where would I have taken my entry? And this is where the volume comes in. And if you can understand how the volume works, then you win. Now, this is a great example because the power dot formed here when they spiked it, which is very interesting because normally it'll form here on this one, not on this one. This candle had 174 million on the buy, 177 million on the sell. That's a lot of volume. And it moved pretty aggressively from 73.61 to 73.71. That's a 10 pip move. This one, 144 million on the buy, 172 million on the sell. Now pay attention to that. Let me repeat that. This is important. 144 million on the buy, 172 million on the sell. So it had negative volume. That itself would tell you that this price level is now sacred to them. Not to me, but to them. Because they don't want that to go any further. All right, we have a few questions, so let's see. Well, you know what? In regards to data, which data feed is best to use? I use Kinetic by NinjaTrader. I don't use FXEMs. I don't use MB Tradings. And the reason why I use Kinetic data is because I don't want to bias data from the broker. Plus the fact that the Kinetic data for FX has all top 12 tier 1 banks. So I don't need, that's all the volume that I need to make my assessment of what's happening. But let's continue with this though. So here in the volume, what are you doing awake so early, Ricardo? Here in the volume, it's it's telling you that this candle here had negative volume. Negative volume. Now this next one here has negative volume again. 177 million on the buy, 203 million on the sell. A difference of 26 million. Whoa. What is that telling you? That is telling you that there is negative volume in a bullish candle. That is significant. That is telling you there is no way, it's impossible for them to break above this level because they go at it and pull right back. Now this next candle is very significant because the volume dropped. 68 million on the buy, 100 million on the sell. Again, negative volume. And then this one, they just pull away because they're saying, no, we are not going to sell. Now, why did the volume drop? Because the buyers don't want to buy at this price level. They want to buy up here, and they want to bid up here. And because the seller is in control and is not selling to them at a higher price than this, than 73.79, they're not interested. Now here, for instance, it gets very interesting. Here you have 102 million on the buy, 85 million on the sell, a difference of 18 million more in demand. But the sellers will not budge above this price level. You see how that wick just goes right at it and then boom, bounces right back down? Your entry would have been here, here, or here. I would have preferred here. Normally, you have an hour to 15 minutes to 15 minutes to assess your entry, determine your risk, your stop loss, and even determine your take profit target. That is, oh God, what are the words for that? A lifetime of information. A lifetime. Why do buyers want to buy at a higher price? Because they want to drive the trade long, and they want to buy in this case, the British pound at a cheaper rate. But the seller doesn't want to sell the British pound at a cheaper rate. He wants to maintain his value because he's still booking in a profit around this level. So you have to look at it from that perspective. Supply and demand, but who's in charge? And this is where a lot of people get it wrong. You know, they say, well, the buyers are coming in to control the market. They're not controlling a damn thing. All they're controlling is what the seller is willing to give to them. That's it. So, you know, I laugh when I hear these educators say, oh, the buyers are coming into control. They're not controlling anything. The one that's in control is the seller. If he wants to sell, he will sell. And if he doesn't want to, he won't. It doesn't matter how much the buyer can bid the price up. The seller may not want to sell it up here because he'll lose. He's not going to lose profit. So he wants to hold it at a specific price level. And he pretty much names it and says, no, I'm not selling above this price level. Now, we're able to see this because we're able to quantify with our algorithms their high-frequency trading, we're able to quantify how they're rebalancing their risk through their order flow and do the analysis of price, which is what we call order flow trading through volume price analysis. And that's what we do. That's what these power dots do. That's what our volume indicator does. The sentiment is a lagging indicator, and if I would have taken this trade long, I would have gotten beaten, whipped, and then some. Our leading indicator is the power dots. Once it transitions, normally I would be up, and I'll show you. If I would have gotten in on this trade and gotten in here, for instance, I'd already be up 12 pips. Why am I going to give up 12 pips? So I use this indicator, the sentiment, for one purpose and one thing only. I use it to confirm, number one, that I'm already profitable, and number two, that the direction of the trade is in play and I can rest. I can let it ride. Same with the radar. You know, you have here the British pound, you have the euro. Now, you're seeing them pretty much trade in balance with one another. I would have never taken this trade short, not here, and I would have never taken this trade long. Why? Because I don't have any power dots. I don't have a level that identifies that they're desperate to rebalance their risk, their book of business. I need to see that right here. That's why this power dot was very significant, even though it was just one little pinky. But all it takes is one little pinky to define the movement. Question. What level was your entry? You mean where would my entry have been in this trade? The price level, and I'll tell you right now, would have been at 73.74. The power dot level was 73.79. So we're talking 5 pips away. You're in Mallorca, aren't you, Mike? I'm going to have to go visit you, buddy. I haven't been to Spain in a long time. I miss Spain. Such a beautiful place. I always told my wife that if ever I retire, I want to retire in Spain. I'm not going to Mexico. I'm not going to El Salvador, where my family's from. But I am going to go to Spain to retire. That is for sure. I've even been invited to go to Thailand. But I like Spain. I'm not going to tell them I'm bringing in money or do business there. And D, all I'm just going to do is just live there. That's all. Actually, my uncle is president of El Salvador right now. So I don't really have anything to fear down there, but I just don't, I don't like the lifestyle. It's just the way it is. But I like Mallorca. I think Mallorca. I've been to Spain, yes. I was in Spain for 2 months, actually. I was working there on a project, and I went there about 18 years ago. I loved it. I loved Spain. So yes, getting back to this, here, that's all you needed to know. You didn't need to know anything else. Now, normally, and this is where it becomes very interesting, that normally, when you identify the price level, you can put an entry level 2-3 pips below it. They're gonna tag it and pull it in. Make no mistake, they're gonna drag you into that trade because their order flow rebound, here is so unique. And this is where the brokers don't really hit you. They don't widen the spread. They don't do any of that nonsense because they can't see it. You're working with technology that is decoding the bank's algorithms. I mean, bottom line is you're on the VIP list. That's the secret behind this, guys, that you're finally getting a heads up before they actually play out the trade. So you're not getting late to the party, you're early. Not only are you early at the party, you're enjoying a martini at the party, relaxing, waiting for it to begin, and enjoying yourself. That is what Phoenix Trading Strategies does. It gives you a heads up that normally you wouldn't have. Right, hold on, my phone's going wild. Give me a second, give me a second. Da, 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 da. 1 second. Right. 1 second. I'll be right back with you. Very nice. So, the Martians are calling. That's a good one. The Martians are calling. So, yeah, I mean, you know, that's really the secret behind these trades, guys. All right, let's take a look because these are in play. We'll take, actually, you know what? No, let's take a look at the pound yen. Do I have the pound yen in here? No, I don't. I should have added it. Let me see. I thought I had it in here. Interesting. All right, we'll add that one. I like the, you know, I like the pound yen. I've always liked the pound yen. But it is one, and this is another thing that you guys have to take into consideration. You know, the Euro Aussie, the pound Aussie, the Euro New Zealand, the pound New Zealand, they swing, and they swing hard. So whenever that happens, change. Okay, we'll go to the CAD yen first. Whenever that happens, yeah, very fast movers. They want you to be one of the 100. Can Phoenix be used on the E-mini futures? Yes, it can. Great question. It works phenomenal on futures. Yes, 73.78, there was a pivot there. Fast mover. Okay, we have another question here. 1 second, trying to go over these guys. That's right, you could trade less and you could look for those trades. Wow, that was a great trade on the CAD yen. We'll take a look at that in a second. And you could trade, okay, the news is out. And it wasn't that significant, but we'll get into it in a minute. Yeah, you can take those swing trades on the 240 all day long. Actually, and you know what? I'm going to show them to you because you actually have hours to define your entry on those. It's amazing. Or you can do both. I like doing both, but I like the 240 minute. And let's just go to the 240 because you know what? We'll use the CAD yen as an example. You know, for those of you that are looking for, and the higher time frame trades are swing trades, but you can also trade them as intraday trades. Like I said, my tolerance for it is about, you know, I'll take 50 pips off the table. I won't apologize for it. And then if I can get more out of it, great. If I can't, then I can't. Now you see this trade right here. This is on the 240. Let's analyze this. I think it'll serve its purpose. Number one, the price level here is 92.68. That's number one. But number two, the distance between that and the candles is 47 pips, and that's significant. Okay, remember that. Here's another thing though. Here's volume is very important, and this thing really, really packs a punch. Give me a second, we have another question. That CAD yen was a shakeout for sure, short and long. Yeah, true. Now, here for instance, when you look at the volume, I mean, this is in the billions, it's not in the millions, okay? So, in this candle, when this one formed here, this was the first one, and normally you're going to get at least 4, you're going to wait for 4 power dots so you can see the overall picture. But what's important here is that you're going to see this one, and then you're going to see this one, and then you're going to move to the second and the third. So here, for instance, this one had 2,033 million, so it's 2.33 billion on the buy side, 1,997 million on the sell side, a difference of 37 million positive. So this one, a negative candle, a bearish candle with bullish volume. As tiny as that volume is, okay, 37 million is nothing against billions that are being rebalanced, is very significant. Now let's look at this previous one. You have 3,758 million on the buy side against 3,796 million on sell side. This one showed the desperation to rebalance, but this one showed the necessity to rebalance and the fact that they were able to offset their risk. This next little pinky right here, this one, less volume. Look, it went from 3,000. This had 3.7 billion. This one had 2 billion practically, and then this one just dropped to 1.7. Oops. When you see that the volume has dropped significantly around a price level like this, that's telling you that they are finishing rebalancing their book, and they're going to take this long. So that means that they're finishing getting out of their short positions, and they're going to book. Now, 240 minute, okay, if you're waiting for 3 power dots, that's 4 hours each one. That's 12 hours. 12 hours. That's a long time to wait for a trade, isn't it? All right, hold on. We have a few questions. Don't mind waiting. Just hate sitting and don't have to sit in front of the computer. Health. All you have to do is, if you know that they're not going to break below it, go to the previous low and put an entry order there and let it play. And then put your stop loss. If you would have put an entry order here at 93.01 and your stop loss at 92.66, you know, that's a good 50 pips. Again, if you're going to swing trade, you got to tolerate the pain. You got to tolerate the drawdown. Or wait for it to move, because once it starts to move on the 4 hour, it doesn't stop. Now here, for instance, again, the volume here dropped significantly, 1.7 billion on the buy, 1.7 billion on the sell, a difference only of 10 million on the buy. That difference told you that they had finished rebalancing their order flow. And then the next one comes in, 1.1. This one had less volume, and they pushed it up. So that's significant. 1.1 billion on the buy, 1.2 billion on the sell. Negative volume. They couldn't finish offsetting the orders. The sellers couldn't sell anymore because the buyers didn't want to buy down here. So they said, no, we want to buy it up here. If you sell to us up here, we'll take it. If you sell to us down here, we won't. So they couldn't offset those orders, and then finally that drove the sellers to have to sell at a higher price, where the buyers wanted to. That doesn't mean the buyers are in control. That just means that the sellers already rebalanced their book, and they could actually make the decision to sell at a higher price to the buyers because they weren't going to get hurt anymore. They were not going to lose. If you can understand the institutional mindset behind the trade, you win. You have to understand their logic and their reasoning. It is numerical. It is simple math. 1 + 1 = 2. not 1 plus 2 equals 1. It's accounting, boys and girls. These guys are looking to make a buck. They're not looking to lose. Now, the feed that you have is a retail feed. It will never reflect an institutional feed, ever, and that's okay, because we've been able to synthetically create the volume so that you can feel the emotion behind their need. That is the difference. That is why you can't trade without this technology, and if you do so, you do so blindly, because you're going to lose, because you're never going to get the insight that you need, which is not hindsight, but real sight. Remember, with the volume indicator, which is unmatched by anything out there, you're able to see what they're really doing inside each candle. You can see the depth of market in the candle. That is very significant. And the price levels, the power dots, tell you when you should be looking at the market, because it identifies that they have to rebalance their book. It identifies their price level. It identifies that volume and momentum are coming into the market. You get the roadmap. So you get the roadmap and the depth of market in each candle. I mean, if you're not excited, then that means that you haven't had coffee today, and you should make some. And if you're fearful, then you need to overcome your fears. And I can't help you with that because I'm not a psychologist. Go see one. I have. They've told me that I'm clinically insane, but I've refused to accept that, because only a clinically insane man can help create such a thing. Now, granted, I'm not going to kid you. You know, the quants that design the super algorithms, the supercomputers for the banks are insane people, because you have to think outside the box in order to create what they've created. But you have to even think outside the box 10 times more to counter-program what they've created. And that's what we've done. We've counter-programmed what they have created. And the beautiful thing about it is that they won't change the protocol, because I know their protocols. And the reason they won't change them is because they've spent billions of dollars, not millions, we're talking with a B for boy, billions of dollars creating these protocols, and they're not going to change them. Now, granted, it's too expensive to change, but here's another thing. There aren't enough people that have my technology out there. In order for them to make a change, I would have to sell millions of copies of licenses for this, and I'm not going to do that. I'm only going to sell no more, and I'm pushing it 200 licenses, because that's all I need to create my prop desk. And after that, those of you that take advantage, you take advantage. And those of you that don't, I wish you well. So these type of algorithms that we've created supersede anything that you've read on volume spread analysis and volume price analysis and order flow trading and market delta and all that nonsense, because we're actually giving you the real picture, but we're making it easy. We're making it easy because you're able to understand what's happening behind the scenes. That is the real value. But, you know, let's underline this and let's go back in history and see what it actually did, because it's important to understand the play. That's what makes sense. And we'll measure this so you can see the total move. Give me a second. What was the total move on this thing? Because this thing had to have moved really big. Ended up going all the way up here. 240 pips. And it took 1, 2, 3, 4 days. Now, if you know that that's going to happen, then at that point, me and Gail are partners, and we've known each other for a long time, and we both worked on programming this. Now, if you know that this is going to move significantly, then at that point, What's the difference for you? Where does it make sense? What makes sense about this is that you can actually take a trade like this and go in with very low leverage or with very little money so that you feel comfortable riding the wave. That's something I cannot help you with. That's a decision that you have to make. All I can do is guide you in the direction of the trade. You have to determine your parameters of risk. I can't do that for you. You have to determine what your tolerance for pain is. I can't do that for you. I can only tell you where they're not going to go anymore and the direction that they are going to go. That will make a difference at the end of the day. And because of that, that is what's going to help you overall be successful. You have to design a strategy of money management. Money management is very important, and everyone talks about it, and I do too. But it's psychological at the same time. You know, for instance, like I said, I like to put one trade, one standard. It can be a mini lot, it could be a micro lot. I'm not putting 2, I'm not putting 3, I'm not putting 5, I'm not putting 10, I'm putting 1 per trade. And I will only do 3 trades at a time. I won't put 5, I won't put 6. Why? Because I can't manage them. I cannot manage those trades. So if you can understand that, then at that point, that's why, you know, that's why I only held those 3 trades, the Euro Aussie, Euro New Zealand, and Euro USD. I only held those 3 trades. That's it. I will not put on more than that. The most that I've put on is 4 trades when I know for sure the direction of those trades and I know that I can manage them. So let's go down here to let's go to the 60-minute on this one, and we'll go back and see where that line comes out. This is a good example to look at today. I knew that the news was going to be light and that there weren't going to be that many moves during the U.S. session today. It happens because everyone's really active during the European session. And I hate losing sleep. I'll trade the Asian session, but unless I can't find a trade during the Asian session and I'm rested, I will not trade the European session because you should never go into a trade tired. See, this one right here on the 60-minute told you they were going to come down. On the 60-minute, you had 3 hours. Seriously, 3 hours. This was the level. So, you know, you can find these trades on the higher time frames and take your time. This move to the downside was, let's see, from top to bottom, 120 pips. When did it announce itself? It announced itself at 3 a.m. Pacific, which is 6 a.m. Eastern. You had a 3-hour window. A 3-hour window. That, to me, is very significant. And if you guys can learn to do this, because this is teachable, this is learnable, I know because I taught myself how to do this, then at that point, you'll be able to get this. You'll be able to figure this out. You'll be able to move forward. You'll be able to see what I see. But you can only do that if you have the technology. Then at that point, that's when it makes sense. If you don't have the technology, you're not going to be able to do anything. You got to take that leap of faith. Otherwise, you're going to get left behind. Because right now, yes, I'm organically growing this, and people are starting to get to know what I'm doing. But I already have, you know, I'm coming out on an ebook next week that Trading Pub put together with 4 other educators, and they're going to be sending it out to their mass email. And I don't know, you know, what will be of it, but I know that I'll get a lot more people interested, and I won't be able to do one-on-ones anymore the way I'm doing now. There'll be group sessions. That's just the way it is. And once I reach my mark of the licenses that I'm going to sell, then that's it. If you didn't get it, you're out. And if you got it, then you're in the circle that you've always wanted to be. Then you have something that you've always desired could be created and built to actually trade against the banks, because you're the underdog, and this is a war of the highest order that has been declared against the retail traders, and they never apologize for it. You were served on a silver platter to them, and that was it. And they didn't see the need to do anything further for you. So here's our level. See, look, we didn't have any power dots here, but that's okay. We're on the 30-minute. On the 60, let's go to the 30-minute and see if something appears. So yes, get excited. Get excited right now, because this is the moment that you need to get excited about trading. The volatility is here. It's not going away. The central banks are at war with each other because they're trying to save their economies, but they don't have the politicians backing them, and that is what makes their problem very big. Now, make no mistake, the middle class is in danger, and it's been in danger for a long time, but now more so than ever. Let's go back to this. Let's see, where was this? Where were you? I think it was around here somewhere. Huh. Here it is. So here, again, no power dots on the 30-minute. Doesn't matter. You had the 240, and they held strong. Let's go down to the 15-minute. Sometimes you get these levels on the smaller, if they repeat themselves on the smaller time frames, you're good. All right, let's see. In terms of trading E-mini futures, would I have to make any adjustments to the indicators to trade your methodology? Not really. No. You just have to learn my methodology, my friend, and that has a cost. Now here, for instance, let's go back. This had to be around here somewhere. I think it was here. Let me see. Back. Where was that? Did we pass it? Maybe it was around here. Had to be here. No. Hold on. Trying to search for that. Whoa. There it is. See how they held that? No power dots, granted. But they held, and then they continued, and then they popped. And then they never looked back after that. So yes, those trades on the 240 are gifts from heaven. You can't call it anything else except that. Let's refresh this and go to 10-minute. Well worth is the investment to learn my method, my good man. Indeed, indeed. Let's give it a second. Now, the one thing that we will look at towards the end of the day is, and I'll look at it towards the end of the day, is if there are any power dots that form at the end of the day. If there are, then those are trades that you look for on a Sunday. So for instance, see, we didn't have any power dots here, but if we would have, then you better look for that trade on Sunday, because it's going to give you at least 30 to 50 pips out the gate at the open. And you're saying, wow, that's pretty confident. But it's not me. It's the technology. Again, you know, when we created these algorithms, and it took us a while to create these algorithms, we did it with the purpose of it doing the analysis for us so it could make it easier for us to relate to what was happening. Because the human eye cannot calculate everything that happens here. It's impossible. You just don't have the brain power for it. You know, you need a computer to digitally do it for you, to do the accounting, the math, all that for you. And that's what we did. So here we identified the price level. You know, they did go down, but at the end they went up. Once the level is determined, they may, you know, retrace a little bit, but only because they want to trick the retail trader to going short when actually they want to go long. And here they would have stopped everyone out that went short. But here I wouldn't have taken this trade because I didn't have any power dots. However, we did have them in the 60-minute. So in the 60-minute, if I would have identified that level, then at that point it would have made a difference. All right. How many accounts can we put your system on? Demo, regular. You can put it on demo, regular, and 401k. Can you explain your pricing structure? What's the price for all the bells and whistles? Is there a discount for the most expensive package? We'll do that towards the end, I promise. And we're coming to an end because I have to take my son to school. Otherwise, he gets a tardy and my wife nags me. And we can't have that. So, let's see. All right, so here we identified the level, which was 95.53. Now we can go to the smaller time frame, 15. I will only enter the deal. Good. I will only enter trades. Yes, you can talk to me on the phone. Yeah, not a problem. So let me put in here my contact information so that you guys can have it. My email is Ricardo at Phoenix Trading Strategies, and I'm typing it in right now, .com. I know it's long. It's okay. My telephone number is 818-431-1357. And my Skype, and I've had this Skype for ages, is Ricardo at PFG, because I used to work for them. So here on the 15-minute, you don't have power outs, but you had the 60-minute, and the 60-minute is more valuable than anything. Because if you understood that, you had one thing here. You had pivots. I love pivots around power dots. They are golden to my strategy. Significant like no other. I'm going to be back. We can talk after, let me see, 12 noon Eastern, which is 9 a.m. Pacific. I'm usually good by that time, and the reason why I ask that is because I usually get back home once I take my son to school. I'm usually home by 11:30 a.m. Eastern, which is 8:30 a.m., and then I sit down, I have my breakfast, and then we can talk. Allow me to have breakfast, please. That's all I ask, because I've only had coffee this morning. Now, these pivots here, even though we don't have power dots in the smaller time frames, it didn't matter. The 60-minute told you this was going to go down. And they announced it right here. Remember, it was around 2 a.m. in the morning, my time, which is 5 a.m. Eastern. Now, if you're up this late, then you would have waited for at least an hour to see that they were not going to go back up. And then this pivot, this is the golden goose. This is the one that told you they were done. This is the one that told you they were dead in the water and you could throw the kitchen sink at them. and not think twice about it. Because whenever you find power dots in the higher time frames, they will play out. It's a beautiful thing. You know, when I show you how to design the strategies that you can follow to trade in the higher time frames and go down into the smaller time frames, it's a beautiful thing because the whole picture comes together, and it's what I call $1 million picture. Look at it from this perspective. I used to be a musician when I was in school, when I was in high school, and I loved playing music. I played all the classics. My mother made me learn how to play the clarinet and the piano. I love my mother, but, you know, I was like, really, Mom, the clarinet? She wanted me to play the clarinet, so I played the clarinet. And I learned how to read music, and I was very good at it. And I did it for a very, very long time, until finally in high school, I came to the conclusion that I was not going to make money as a musician. But I loved music, and it helped me a lot. So when I look at the trade, I look at it as if they were musical notes, and it has to play the tune that I'm looking for. If it plays that beautiful melody, then I know that that is the trade that I'm looking for. For some of you, it may be a visual, it may be a picture, it may be an abstract picture. You know, you may love art. You know, I'm not into paintings myself. It's just not my thing. I find it very unique that people would pay millions of dollars for a painting. It's just not me. I'll pay millions of dollars for a beautiful piece of music, but I won't pay it for a painting. So for you, it may signify a beautiful piece of artwork. The question is, how much value do you add to that piece of artwork? Is it worth $1 million to you? To me, it is. If I can see and visually understand and see the melody behind the trade, then you know what? I want it. Because I know that there's no other melody that will satisfy my ear. Now, if you play poker, then you're basically seeing their hand. You have X-ray vision glasses, and you're able to see what they're doing. Oh my God. I mean, kick someone. You know, literally, if someone's next to you, kick them so it doesn't hurt you. But, you know, they'll say, hey, why did you hit me? And you'll say, because I just found $1 million picture, and I want it. That's what it means. So, yes, you can find these trades all day, all week long. My average that I go for every week is 300 pips. That's it. That's what I go for. If I get more, hallelujah. If I don't, I don't. But I meet my mark every week. Your average may be 150, 200 pips, maybe 80 pips. You know, I have a client that looks for religiously just 100 and 130 pips a week, but he trades 5 standard, lots of clip, and he's in it for 10, 20 pips and he's out. That's it. That's all he's looking for. And if he gets extra, great. And if not, he made his money. But he's trading 3 to 5 standards a clip. And he won't let the trades ride 40, 50, 100 pips because he's looking for a specific dollar amount. And this was worth $1 million to him. This made the difference in his trading. Because before he would only go for only 10 pips. Now he goes for 20 to 30 pips. And that makes a difference. All right, let me see. We have a few questions here. Questions. How do I listen to music while trading? I don't. That's true. Kenny G played the clarinet. And the oboe, actually. So, yeah, that's pretty much, right now, that's pretty much all I have to add. Let's go back to the website. Again, my recommendation, read the website and read it well. You know, you'll learn that this is very important, the About Us page, and not because it's about me, but it's because of what I discovered in the industry. You see, I was a retail trader just like you 12 years ago, but I decided to become a broker because I wanted to learn what was behind the scenes, and I could not see it. I couldn't see it. So you know, I I had the good fortune and the luck that I was able to go work for a small IIB, a small independent introducing brokerage firm, and learn the ropes. And then when I became a broker, and believe me, I was working as an assistant for a bunch of young punks that thought they were brokers, that knew nothing, not even about trading. I mean, these guys were idiots. But I wasn't there to criticize. I was there to learn. Once I learned how not to do it the way they were doing it, but do it better, and got my license, I was out. And that's when I went to work for PFG. And my growth was exponential. I mean, it was sick. The amount of I brought in the first year 5,000 accounts. 1,000 of those were in my personal book. And then the other 4,000 were from a division that I helped create. And so I was making so much money. It was beyond what I expected. But it allowed me to do more research, to work with CTAs, money managers, software developers. And that's how I discovered the protocols that they were using to report their order flow to the dealer through a bridge into the platform. That's how I discovered currency portfolio rebalancing. So yeah, it's very important that you understand that. You know, the blog, I don't hide what we do. I don't care to, because I believe that the retail trader needs a shot, needs a chance of winning. The reason why a lot of people don't trade or stop trading is because they don't feel the confidence. They have two things that hold them back: fear and doubt. And that's the one thing that we remove here. Why? Because we mathematically demonstrate that there is no more fear and no more doubt about what they're going to do. Now you know in advance. That makes a difference. So we're going to go over pricing in a minute. I want to thank you for joining us. Remember, we do have a class on Monday morning, same time. And let me stop the recording here.